The softwood lumber industry is taking a hit because of significant new duties from the United States.
Canada's softwood lumber industry in the face of U.S. tariffs.
America is, in effect, charging for access to its economy.
Questions about his next move against Donald Trump.
We have always said that we will apply tariffs where they...
And these meetings, of course, are happening against the backdrop of Donald Trump's trade war. The impact of his tariffs is starting to hit home for many American businesses.
U.S. President Donald Trump's next move on tariffs for Canada could prolong the pain for BC softwood lumber producers.
You could lose $14,000 as a result of what occurred to the lumber trade in North America. One tariff was the beginning of it all. When President Trump proposed a new 25% tariff on Canadian goods in early 2025, tensions between the U.S. and Canada erupted. Softwood timber. It appeared to be just another trade move on paper, but it set off a series of events in a matter of days. Prices rose, factories halted, and one of America's largest timber profits for businesses were cut in half. This went beyond policy. From Wall Street to the building sites of suburban America, the economy was rocked. The storm's focal point is Weyerhaeuser, a well-known brand in the U.S. lumber sector. Not only did their second quarter earnings decline, but they also fell sharply from $173 million to just $87 million this year. Half. Revenue was declining. Earnings per share fell short of forecasts. Additionally, executives didn't sugarcoat anything during the investor call. They forewarned that Q3 will see another $60 million decline. And it was brutally obvious why. Markets were oversupplied, demand had declined, and impending tariffs had made everything more costly. The whole supply chain, from unfinished goods to raw lumber, seemed to be crumbling. However, this was just the start. The United States had piled several tariffs: 10% for energy products, 25% for softwood imports, and a revised 56% anti-dumping tariff for Canadian timber as of 2023. When included in the previously at 14.5%, the overall duties came close to a crippling 40%. Washington's message was obvious. No more time for grace, no more delays. The deadline of August 1st was set in stone. In an effort to protect American mills from unfair subsidized competition, Commerce Secretary Howard Lutnick doubled down. The CEO of Weyerhaeuser supported the action, saying it was long overdue. However, supporting the policy does not spare you from suffering. Even though Weyerhaeuser is in favor of the tariffs, still suffered a severe blow. Prices for OSB and lumber declined. The sentiment of builders chilled. Additionally, house demand began to decline due to already high mortgage rates. The corporation is trying to fight back, buying up timber acreage, investing in engineered wood, and proposing a $100 million stock buyback to show strength. However, when the property market is showing warning signs, even a war chest like that can only go so far. Because housing prices are rising, but timber profits are declining. May saw the biggest decline in U.S. single-family home sales in over 3 years. Interest rate increases were already cooling the market. The new tariffs caused lumber prices to skyrocket. Already wary, builders began pausing their initiatives. Buyers retreated while inventory skyrocketed. Many were unable to defend the additional costs. Analysts now caution that by 2027, the tariffs may raise the cost of a new house by up to $14,000. And it's more than simply a figure. That's a down payment. That's what separates creating a family's ideal home from abandoning it. The U.S. Lumber Coalition is one business body that acknowledges the impact of the tariffs. The impacts are real. Construction slowdowns have a knock-on effect on suppliers, sawmills, and rural economies that rely on consistent building activity. As a result, Canadian policymakers are recalibrating while U.S. policymakers remain solid. They're moving, just talking. Dominic LeBlanc, the Canadian Commerce Minister, made news by bringing attention to a topic that is rarely discussed. Canada owns more than $1 trillion in U.S. pension funds, resources. Every year it increases by $100 billion. The message was unmistakable, even though there isn't a direct threat to take that money. Canada has some authority. They have power. Mark Carney, the Prime Minister, clarified something else. He would not hurry to fulfill any American deadline. Canada's first concern is safeguarding its citizens. Jobs, not responding to pressure from the U.S. The twist then appeared. Canada is now seriously exploring lumber export quotas for the first time in decades. Washington has been making this demand. Years. Although Ottawa has long opposed it, the notion is suddenly gathering support as bipartisan U.S. senators are flying in to promote a managed trade solution under USMCA. Meanwhile, Canadian exporters are quickly changing course. The United States accounted for 78% of Canadian lumber exports just a year ago. That percentage has now dropped to 68%. Now, more of that wood is on its way to Asia and Europe. The change is taking place in real time. Additionally, the U.S. is doubling down domestically as Canada broadens its alternatives. The Trump administration is advocating for the rebirth of domestic timber. This entails a 25% increase in federal harvest quotas, even allowing access to places that were previously shielded by the 2001 roadless restriction. There is a strong drive to increase American wood into the marketplace. Here's the issue, though. According to experts, those initiatives might only result in a less than 1% increase in the overall supply of timber, like attempting to fill a drinking straw in a swimming pool. Simply said, the math is incorrect. Once home to thriving sawmills, areas like Scania County are still having difficulties. Provide years pass before holes are filled. Additionally, the trees still require milling, drying, processing, and shipping even after they are cut down. That doesn't happen all at once. In order to stay up, U.S. mills are making investments in robotics, automation, and expedited processes. Their goal is to accomplish more with less, avoid collapse, remain competitive, and maintain your leanness. In the meanwhile, Canadian timber firms are becoming more intelligent. Due to the American South's proximity to Piñeri land, cheaper transportation, and fewer trade restrictions, several are establishing their businesses there. It's a smart move. They completely sidestep the tariffs by manufacturing in the United States. These changes are also a reminder that the global lumber map is changing, even if Washington celebrates them as victories for local workers. And that leads us to the crucial query. What comes next? Timber is no longer the only issue in the U.S.-Canada timber dispute. It concerns two opposing perspectives on supply and trade policy. Chains. The United States is placing bets on tariffs, recovery, and protectionism. Canada is relying on alliances, strategy, and international diversification. In the center are businesses like Wire Hewer, builders who are seeing rising prices, and regular folks who are unsure if they can afford a new house. This discussion is about more than simply policy. It concerns North's future, construction in America, and who gets to influence it. It concerns whether protectionism is beneficial or detrimental in today's globalized society. It also discusses how a single industrial conflict might have repercussions through homes, communities, and marketplaces. What would you do then? Would you construct if the price went up by $14,000? Do you believe in pension capital? Should trade disputes be handled fairly? And should the United States at all costs preserve its forests or reduce additional red tape for logging? There is more to this story. The lumber